Connect with Sandip Sabharwal, and I'll start with perhaps specifics here rather than a general comment on markets. Sandeep, what caught my attention was Kotak Mahindra Bank numbers. I think after 6 or 7 quarters, they are looking okay. Has the tide turned? Because if Kotak is turning, HDFC Bank would also turn.
There'll be a difference between Kotak and HDFC Bank because Kotak grew advances by 15%. I think HDFC Bank's advances growth is just 5%. So, in that context, absorbing the high increase in deposit costs combined with OPEX increases. So, I think HDFC Bank might find it tougher in the near term. But the stock's also not done well. Like most of the private sector banks have been hibernating, and specifically Kotak Mahindra Bank. I was looking at the chart yesterday. It's at the same level which it was 5 years back. So there's been a huge valuation adjustment while the bank has continued to grow. And the internals don't look bad at all, given that they have a higher ROA than many other private sector banks. So I would think that Kotak Bank results are encouraging, and if we get some news flow on the removal of digital restrictions, etc., which the RBI imposed a long time back, like we would have expected them to be gone by now, but it's taken some time. So that could be an additional trigger. So overall, we've seen stress on the balance sheets for private sector as well as public sector banks, but they are manageable vis-a-vis what we saw in previous cycles. And I think that's the positive part of it.
So, Sandeep, are we moving into that perhaps patch of the market where the word fallen angels would be at play, which is Reliance numbers were decent, Kotak Mahindra Bank seems to be okay. So, is it time to start looking at, like, if I may use the word rather loosely, the yesteryear darlings of the market, Reliance, Kotak, HDFC Bank, and they could now start making a comeback, and the year really could belong to the fallen angels?
HDFC Bank, like I said, it might still take time till credit growth picks up, but Kotak and Reliance, yes, because Reliance results also were positive and outlook seems better than what it was for the last 1.5 years. Kotak, we already discussed. I think valuations have adjusted, and the management has also indicated a plateauing of the sort of write-offs, etc., which is a positive. So I would think that these are under-owned stocks and not much ownership, and because they did not do as well, so they should be able to outperform. Uh, and I think that's the story of this result season overall. As I see the result season, uh, the positives are weighing higher than the negatives in terms of delivery because the expectation itself were quite low across a vast swath of sectors. And that should help the market stabilize unless and until we get something disruptive in terms of taxation in the budget, which we have no idea of.
Okay. Now to the big picture question, Sandeep, which everybody is talking about. The weakness in rupee is getting more and more pronounced. The strength in the dollar is getting evident. Are we in for more of this churn, and which could extend itself well into couple of months for 2025, which is weakness in rupee, strength in dollar, selling in emerging markets, and India gets hit?
The emerging market selling, so India has been hit disproportionately. The outflows out of India are very huge relative to other markets. Like 45,000 crores has already gone out in January. And that indirectly it's the liquidity in the system also because foreign investors selling as they pull out money. Then that much liquidity also goes out of the system. And in a tight liquidity scenario, that's not good for the economy per se. Now, the rupee should have been at these levels much earlier than what it came to because nothing is absolute. It's all relative. So if the dollar went up 20% against the Mexican peso, 20% against Brazilian real, 4% against the yuan. How can the rupee be stable when we are a trade deficit country? So the rupee had to adjust. I think that level of adjustment has happened. So from here on, it's back to normal fundamentals. I don't see a severe decline in the rupee going forward after this adjustment of 3% has happened. And I don't see an appreciation cycle also. Like typically Feb March are good for the rupee, and generally because a lot of inflows, year-end inflows for the financial year come in, a lot of remittances get bunched up end of the year. So normally rupee doesn't decline much in Feb and March. So let's see how that goes. But overall, it will be a trend. And if foreign investors don't get deterred by some taxation issues which could come up. So that's the biggest fear today. That will taxes go up further? Will that deter foreign investor flows further? So I think that's the bigger concern. If that does not play out, I am not so much concerned about the rupee per se and its impact on outflows. I think outflows have been more due to growth and taxation issues.
Interesting. Since you're on the subject, Sandeep, of growth, I wanted to analyze some of the earnings with you. And considering a large cap, a large part of the large cap IT earnings is now behind us, what is your sense on, what the prospect for IT stocks are, and whether or not you would be buying into any of these now that a major chunk of the earnings are behind us, given that it's such a mixed bag? You really can't sort of draw up any sectoral trend, if you will.
So I think there are two things. One, on large deal wins, except for TCS, we haven't seen acceleration. We have seen actually deceleration for Infosys, Wipro, etc. On the other hand, we have had positive commentary by these companies on discretionary spending, pickup of spending on BFSI, which is the largest segment for them. So I think there are mixed news flows. So, and given the fact that many of these stocks did so well vis-a-vis the Nifty, like the IT index last year, if I remember, went up 3 times than that of the Nifty, then they need a substantial delivery of outperformance to keep on performing. So the results reflect that stocks could be more muted in the near term rather than have a big upside.
All right, that's the take coming in on the IT space.
And of course, you saw a lot of action, like we've been highlighting, at Bharat Mobility, or Auto Expo, as it was earlier popularly known, and Hyundai, TVS, a lot of other companies in focus. Maruti as well, especially with the focus on its e-Vitara now. Hyundai and TVS are looking to explore partnership for the last mile mobility solutions as well. Sandeep, the entire EV supply chain, not just the main frontline production companies, but the supply chain as well is now getting a lot of thrust. We've seen at the Bharat Mobility as to how many companies are now wearing towards a larger size of EV in their production pie as well. Anything exciting that you may have spotted?
Like the trend we are seeing is that most of the companies are getting EV ready. They want to come out with EV models, but they're also watching for the markets to absorb and be ready for the EVs. So in two-wheelers, we've seen the adoption being faster than in cars actually. So I think that's the trend we see, that most companies seem to have recognized that longer term they have to be in these segments, but they don't want to be aggressively pushing this segment till there's a consumer pull coming through. And that's the trend we are seeing in like China has gone whole hog into EVs, but ex of that, most of the other developed economies also, if we see, the trend towards EVs after picking up substantially has stagnated somewhat. So I think that's what we'll see. But the key is that most of the companies who were in denial about the EV revolution eventually happening are now accepting this.
All right, that's about the EVs, but definitely the kind of launches that we have seen, EV was definitely one of the major talking points.
If you like this video, then like, share and subscribe to ET Now.